Hello, everyone. I'm Robert Wenzel. I'm editor and publisher of economicpolicyjournal.com. And what I'm going to be discussing today is accumulation of stock. This is a very brief video, probably will only take about 5 minutes. And it's aimed primarily at my readers of the EPJ Daily Alert, which comes out Monday through Friday on any day the stock market is open, where I discuss the economy, different indicators in the economy, and also make general recommendations as far as stocks and different investments. And what I do in the alert is regularly discuss accumulation, and I will advise accumulate this over time or that over time. So I want to just briefly touch upon what I mean by discussion, by accumulation. What I mean by that is if there's a stock I'd like to buy, or if there's a new type of portfolio, if someone's just moving into a portfolio that's based upon the types of recommendations I'm making, I don't like to buy everything at once. And that's based upon my philosophy that I'm generally buying on the downtrend when an economy is, or a stock or investment is dropping in price. So if it's dropping in price, I don't really know where the end is going to be, and I don't know where the turn is going to be. That's part of my philosophy, which I discussed in an earlier video, and I will put a link to that video at the bottom of this YouTube. But essentially what I want to do is I want to accumulate over time. And so let's say someone new is just coming in and starting to follow my portfolio advice, and say at a current point in time, I'm recommending that 5 stocks be purchased and 5% of the total portfolio be put in each one. So you've got 5% in 5 different stocks, 25%, and at the same time, you're keeping 75% in cash. I tend to keep lots of cash generally, unless I see a major move, and then I start to move much more aggressive with regard to the cash. Because I want to always have availability for things dropping more, as long as my fundamental reason for buying something remains intact. So if someone new is coming in and I've got a recommendation on 5 stocks to buy 5% of a portfolio of each stock, what I would recommend at the beginning is to just buy 1% of each stock. That way you have a toehold in each one of the positions. So that's only 5% when we're really expanding to 25% of a portfolio. And again, I'll generally I keep high cash levels, but by high cash levels, generally I mean 20% as I'm recording this in early 2016. I've got higher cash levels between 30 and 50%, which is a little bit unusual to be that high, but I do keep probably 20%. Unless I see some enormous inflation where I think it makes sense for everything to be put into some kind of an asset or for some other reason. So what I would do if I've got 5 positions and I want to accumulate 5% in each one, I would start off by just buying 1% of my portfolio in each of the 5 stocks. So I've got 5% in total day one. And then depending upon how much cash you have, I would spread that over time. I would look at, say, a quarterly period, or maybe 6 months if you have an extremely large portfolio. But for the most part, if you've got a middle-sized portfolio, I would look accumulating over a 3-month period, a quarterly period. Say you have $10,000, what I would do is I would recommend that you buy over a 3-month period, 3,300 roughly every month. You buy once a month. If you've got a portfolio of 100,000, you still do that over a 3-month period, but instead of accumulating stock on just once a month, you could break that up a little more and buy every week. You buy some stock. Now, in addition to this, what I would do is I tend to buy the stock that is weakest of the 5. If I'm strong on all 5, generally as strong on all 5, and I think the ruling reason exists why that stock should be purchased, I will buy the one that's weakest. That way I'm always buying the things that are down. That's my philosophy. I want to get those low prices. So if there's one stock that's going down, down, I may have 1% in one recommendation, 1% in another, 1% in two others, and then one, it might increase to 2%, 3%, 5%. Now I won't go over that 5% barrier, and then I would pick the one that is weakest after that and buy that. Or if they're all sort of generally trending in the same area, I would increase my portfolio from say 1% across the board to 2%. But I'm always trying to buy the weakest link. Now, in addition to that, what I'm also doing is buying on days when the market is down. If the stock is down for no reason, where my ruling reason continues to exist, if the stock market is down, I will buy that week's allotment of money, and I will add to it the following week's allotment of money. If say I've got $100,000 portfolio or higher, and then I may just skip a week, or if it continues to go down, I would buy some the following week, and maybe shrink the period in which I'm accumulating from 3 months to 2 months to a month and a half, depending upon what the market's doing. If the market's going down, I'm accumulating a little more aggressively than if the market's going up. I just tend to like to buy on the downside. Now that's not 100%. For example, if I learned about Apple Computer very early on when it was up, say 50% off its bottoms, and I learned that Steve Jobs was doing very, very aggressive things at the company, that he had things called iPhones coming out and iPads and all that kind of stuff, and I saw the potential for the stock going up a much further, I would buy the stock even if it was up 50% or 75% or whatever. So I'm not saying this is an ironclad rule that I always follow, but it's one that I generally follow because I think that the best buys generally tend to be in those sectors where people are ignoring them for incorrect reasons, and where I see the potential for the change. Right now, for example, I'm very bullish on oil, I'm very bullish on gold, silver, commodities in general, because I see most people do not understand how inflation can heat up very, very quickly. I think it can. I think we're very, very close to that period. I think it could be only a few months away, or it might be even a year away or whatever. But I'm accumulating on a downside here, because when the final move comes and it starts moving up again, it's going to be extremely rapid, and I'm going to have all this stock and all these positions here. So I will look across the board, I will look across the sector, I will look at individual stocks, and I try to buy when they're cheapest, but that's not a hard and fast rule. There will be times when I'll break that rule, but not very often. The idea is to accumulate over a period of time and take advantage of any drops in the market or an individual stock, which might give you an advantage of 3% or 5% with regard to your positioning, even more. I mean, if you're having a dramatic drop, which we're having now in commodities, if you get some of that at the bottom, you're going to be in a real good position. So I've talked now about accumulation of a set amount of money. This also applies to people who have new money coming in. If you've got new money coming in, if it's a steady amount, you accumulate steady, focusing on the one that is weakest. You want to accumulate that first, and then what you want to do is eventually bring them all up to the same level of what you're trying to add to the portfolio. So that's for people who have money over time. Same thing applies if you have a stock position that you're selling and you're liquidating. What you want to do is you want to liquidate. I'll discuss sometime in the future my rules on liquidation. But basically what you want to do in a position where you've liquidated a stock is, again, if you're keeping it in the portfolio, buy the weakest spot first and then just fill up from there. Okay, thanks very much. Again, for any of you who may have caught this outside my regular EPJ Daily Alert subscribers, my address at my blog is economicpolicyjournal.com. I have links to everything else I'm doing, including to the EPJ Daily Alert there. So if you go to the economicpolicyjournal.com, you'll be able to get pretty much aware of everything I'm doing. Thanks again for listening.